Okay, recording this video on Sunday the 16th of November 2025, just gone 4:47 a.m. Chicago time. Do hope you are doing well. So it's the weekend, time for another weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I'm seeing on my charts. Alright, everybody wants to know, is it all over? Because we've had another recovery, just like we had a recovery last Friday. And, well, cut to the chase. No, it's not over. And I'll tell you why, because we're going to go through the Emini charts first, 13,500 tip bar chart, which is the most important one. And then we'll go through, actually going to talk about gold, silver, Bitcoin, and Ethereum first, because, well, we got some things happening there. Professionals starting to get interested. Anyway, so here we go. This is 13,500 tip bar chart. I think what I've added to the conversation in technical analysis over the last, I think it's almost 20 years, is measuring average trade size to identify professional activity. Also moving from one side of the boat to the other with exhaustion momentum reads, where the market gets overextended in one sense, and measurement of that is volume momentum, and we rock from one side of the boat to the other. But this is where the interpretation of the professional bars is so important. And what we've got here is 2 weeks of 13,500 tip bar chart of the E-mini. So vertical solid yellow lines are the beginnings and the ends of the week. So mid last week we had blue professional bars making these highs. We put a blue box around that when they're breaking out of a little congestion zone, and it shows the professionals are potentially taking profits. We'd had a nice little exhaustion sell pattern, and that's what we were bouncing off. But at these lows, there were no blue professional bars. Yep, we had a couple of blue professional bars here that just squeaked the market, pushed the market a little bit higher into that zone. And that zone was where the professionals sold it down. And we had a really nice move Wednesday night into Thursday sell-off, and then the reversal on Friday. But at the lows down here, we don't have blue professional bars picking it up. We have Rambo patterns, we have amateur bars into those lows. So we're running out of puff. You can see the momentum reads gets pretty weak on the downside. We've got all this amateur activity thinking the market's going to sink even lower. No, they got wrong-footed. And we have this sequence. This is blue professional bars pushing the market up. Now, this is the pattern that I want you to understand. There are no blue professional bars on the way down here. The blue professional bars are pushing the market up at that point. And I said in last week's video, that is not a proper bottom. We don't have blue professional bars right at the lows. They'd be legging into this market here, here, and here. Every time we're making little pushes down to those lows, you'd see those blue professional bars firing off. We'd have these blue boxes around the bars showing us that they were picking up at those lows. And instead what we had was blue professional bars pushing us out of this congestion zone. And I said, that's not a proper bottom. And it was not. And I also said that we would roll into cyclical resistance. So let's just go to that chart on the, well, let's do it this way. Here we go. We'd roll into cyclical resistance. We'd overshot cyclical support on the highest time frame here, pull back to end of trends, lowest time frame, intermediate time frame. We pushed past that and we started to roll into an uptrend move. I said at some point we'd get cyclical resistance come in and we'd roll over. And here we go. We've got a left shoulder being made by pullback to end of trend on the lowest time frame, followed by pullback to end of trend on the intermediate time frame. And we've just overshot resistance on the highest time frame, and that's enough to roll us over. We get a sign of weakness up here at the highs. We actually have another one just above that price bar up there on better sine wave, and we roll into this big downtrend. So we had two things that we were looking for. We were looking for blue professional bars at the highs, cyclical resistance, and that's why we had the sell-off at the end of this last week, because we did not have blue professional bars marking a bottom here. They gamed it up here, got everybody excited Monday, Tuesday. Oh, the market's taking off. I better jump in. And no. And we have all these blue professional bars. Here we go. First little group there, and then a whole group of them. Exhaustion buy, bearish divergence flush, amateur up bars, amateur up bars. We have squeeze patterns, squeeze, squeeze, squeeze. We rock out of those squeeze patterns with a trending move, bang, into a downtrend. We signal down. So now, at the end of this week, we get the same thing. A strong Friday, looks like we've recovered from those lows, but is that it? No, it is not. because we don't have the reverse. We don't have big pro bars. I mean, the background was in blue on these ones. So not only those were regular professionals up at those highs, they were big professionals, big pros at those highs, taking profits, getting short. And do we have anything like that on the flip side down here? No. So I'm afraid to say we're still looking for weakness into this downtrend. Now, we didn't have blue professional bars like this beautiful pattern here pushing us higher at that point. We're still technically in a downtrend here. The background's in grey, or it's black at the moment, but grey's in the background. Last signal was a downtrending signal. This is exhaustion sell, potentially getting the move going. Momentum reads super weak. We don't have exhaustion sell down at the lows down here. They're getting the move going from this high, this one here. So we've got to go see momentum patterns on the downside. We've got to see blue professional bars come in cyclically. We've also got to come into support. And what we've got going on here on cyclical patterns, yep, we've got a nice downtrend going on here. We've gone to pullback in a downtrend, having some trouble here. The bars have turned red a little bit, but there we go. We've got a cyclical resistance going to come in on the highest time frame here. Now, whether this is going to push higher than 6,800 Monday, Tuesday, before that comes in, or we're just going to let loose on Sunday night into Monday. That cyclical pattern comes in, and cyclically the energy starts moving to the downside. I don't know if we're going to creep higher and then come down, but we're definitely coming down. So, because we have no blue professional bars at the lows, and so that's the pattern I want everybody to be looking at on these charts, is what are the professionals doing? What are the big pros doing? Because without them properly bottoming the market, I'm afraid it's not all done. So there we go. So it's almost, it's not a rerun of last Friday's activity, but it's close in as much as no blue professional bars down here. So there we go. That's 13,500 tip bar chart, and we'll wait and see how this plays out. Quickly, just going through E-mini charts daily all the way down to the 15-minute chart, because this isn't all gloom and doom. I think, the equities market is heading down, but on the daily chart, I've been saying this for months and months, we are not in a downtrend. The background is in red. In terms of price and volume, here we're still in an uptrend. This is pretty important though, this level that we've got, 66.55 on the E-mini that was made last week with that low. If we break that, these bars will turn white, and so on. The better sine wave indicator will be turning into a downtrend. But at some point we're going to come down, we're going to be caught with cyclical support on the intermediate time frame. You can see those lines here, the medium thickness lines here, are parallel. That means we're in a trending phase, but that could easily change as prices head down. These things will head down and they'll cross, and will be caught by support on that intermediate time frame. So if that level 66.55 goes this week, then look for the next place to be caught by support is when those intermediate time frames on this highest time frame come in. It'd be nice if equities continue to rally. Everybody's taking a hit on their balance sheet at the moment, but we don't have blue professional bars. We don't have exhaustion patterns at the highs. This thing has not blown off. We need the reverse of what we had with this low being made. Exhaustion sell, bullish divergence, big pro bars coming, the background's in blue, the blue professional bars are down there. We need the reverse of that in order to stop this uptrend. So we're going to go for some blow-off move in equities. They're going to relight the market somehow, whether it's lower interest rates or more liquidity or whatever it is. We're still in an uptrend on equities. 135-minute chart. Now this is where the trouble comes in. We've done a lot of damage on the upside in terms of putting in pullback to end of trends. Yet we had the first little sequence. I talk about the end of trends rippling through the time frames from the lowest time frame to the intermediate to the highest time frame. So we had the first level here came in, pullback to end of trend on the lowest time frame, followed by pullback to end of trend on the intermediate time frame. So those are slightly thicker lines there. You can see low, intermediate time frame. But then we busted out of that. The end of trend doesn't mean it reverses into a reversal trend and we go the other way. It just means that we're going to pause, and we'll either get a resumption of the trend or get a reversal of the trend. We paused, we broke out of that into another trending move. And on that move, and again, another left shoulder being made, pull back to end of trend on the lowest time frame, pull back to end of trend on the intermediate time frame. Sign of weakness comes in, the bars start turning white into a downtrend on this chart. Background's not turned into grey here because we haven't broken those support levels. Here it's a little bit further away, 65.89. What did we say here? This was 66.55. This will be 65.89. So it's further away in order to break into a downtrend here. But on this chart, you can see we've run out of puff in terms of the trending move at this point here. And so that means that we're going to sell off probably through 66.55 until we get caught by support on the highest time frame here. And that highest time frame on the 135-minute chart is the intermediate time frame on the next time frame up, the daily chart. So those lines there are these lines here, the thick lines here. So that'd be my guess that we're probably going to roll into a downtrend here and then be caught when those two come together. So how that plays out, I don't know. That will then make this exhaustion sell pattern look like getting the move going. Potentially, if we break through that, we'll need to see another exhaustion sell pattern come in there. So it's getting interesting. 45-minute chart here. Here we put in that pullback to end of trend. We're fussing around, lower high being made here. The bars are white, which means we're in a downtrend. But we've got all of this activity here, all those big pro bars that came in at 6,600. And here, at least on the 45-minute chart here, you can see blue professional bars come in there at that point. This exhaustion sell looks like getting the move going because it's busting out of that little island reversal there at those highs. So we're likely to see an exhaustion sell signal here. So I think we could easily bust on that time frame, 66.70 there, and go look a little lower to see where the exhaustion pattern comes in, where the blue professional bars come in. That's the 45-minute chart. And here on the 15-minute chart, here, this is last week's activity. Tick bar charts and time-based charts look slightly different. Here we had blue professional bars at the lows there with an exhaustion pattern. But with this low here, those blue professional bars were buying us up into that move. They were not getting interested on the way down there with this week's activity. And here we've got a momentum reads pretty negative at that point. We fell out of bed with two squeeze patterns here. Squeeze when we get the support and resistance lines all come together, very tight together. So we had one pattern there and one right up there. You can see there's the resistance on the 15-minute. Sign of weakness comes in, we break into a downtrend. It's not confirmed with the downtrend here because we didn't have blue professional bars at those highs, but price-wise it is weak. So there we go. That is the E-mini as I read it at the moment. So let's just see, how it works out. Stay nimble for sure, but I wouldn't be surprised if we see lower prices on the E-mini in order to see blue professional bars coming on the way down. A little bit somber news on equities, but on the flip side, we could have some good news in things like precious metals and crypto. So here's the last couple of weeks in gold. Pretty interesting rally that we had this week. We had exhaustion sell bullish divergence last week, signal there. This isn't in the right place because we had some blue professional bars just active at those highs, and that's what triggered that short pattern. These signals are nice because we got the exhaustion sells going on here. We break into an uptrend. This week, market topped out 42.60, exhaustion buys, flush patterns, flush. But the blue professional bars, yep, they were definitely taking profits here because the blue professional bars are going up. Not so in this case. They were buying that dip, and you can see the rally continued. We have a pattern here, signal short, with a nice move over the last couple of days. The sign of weakness up here, not a whole bunch of blue professional bars, but a whole bunch of blue professional bars at the end of this week on gold, coming here at close to 4,000, 4,030. And big pro bars, exhaustion sell, bullish divergence, we've had a signal. So on gold, let's look for 41.20, 41.25 to be taken out on the upside to see if we get a rally in gold. So people are keen on gold. And silver, similar type pattern, signals haven't triggered yet, but here we didn't have blue professional bars right at the highs on silver up at 54. Just amateur bars, flush patterns, and so on up the highs. We've rolled over here. But we're coming back down into the zone at 50 where the blue professional bars were interested last time. Little bit of activity here on the lows. So let's see. Silver hasn't triggered into an uptrend. The signal could come first in gold this week, and we have strength in gold and then followed later by strength in silver. Bitcoin also wrecked down here, down at 94. Been a nasty couple of weeks on Bitcoin, but now we have the makings. Hasn't signaled yet, but here we go. Big pro bars come in here at the lows, and we're holding at that point. So let's see. We could trip into a signal. We had an early signal here based on this exhaustion cell bullish divergence. Here we got, no, the exhaustion cell was getting the move going. So let's wait and see. It's not signaled yet, but Bitcoin could be lining up this week for a signal. Ethereum, though, down here at 3,200, double bottoming at the moment. So last time we had a signal, really nice patterns, exhaustion cell, bullish divergence, big pro bars come in here, trip into a signal and we get going. Runs out a puff with exhaustion buy and bearish divergence. We come back into 3,200. Professional bars getting interested again. Amateur down bars at those point. We just need to break through the trailing stop on better priam and signal into an uptrend there. So those are looking interesting. So that's gold, silver, Bitcoin, Ethereum. Potential reversal signals this week. And crude signaled this week. I think there was quite a lot of macro news that drove that signal in crude this week, but you can see big pro bars coming at the lows. We'd had our exhaustion cell bullish divergence the week prior. We came back into 58s and then we've signaled from there. That was all news related. Let's see if it gets through 60.50, 60.75 to see if that's got legs. The price activity, it was global macro news related that caused that price activity, but you can see here's the professionals. They knew something well before that news came out. So let's see if we spike through there to new highs. Natural gas not doing so well though. This week's activity, we've had big pro bars, not exhaustion patterns at the highs, but we had an exhaustion pattern getting the move going. We've come back and just retraced there, no blue professional bars at the lows, so we're still in a downtrend on natural gas. And then just quickly on the Forex charts, signal last week on euro, and we've continued to rally higher. The big pro bars came in here on the retrace, not taking profits at the highs, so we're still in an uptrend on euro. British pound, I mean, the signal this week, God knows who's buying the British pound, but anyway, because the place is a mess. But professional bars, gaming it up here. Let's wait and see it. Well, they're just gaming it up in order to wait for a breakthrough 31. So I'll wait and see whether this actually works out. I mean, in terms of patterns, if I'm being consistent and logical, no, we haven't had blue professional bars down at the lows and nor exhaustion sell at those points. So as I'm looking at this, this is, no one's buying the British pound. It's being gamed up at that point. Let's look for a breakthrough 31s there to see if we get a downtrend, proper downtrend in British pound. Aussie dollar also looking weak. We had a signal at the end of this week. That was what was important on this chart. Aussie dollar 66, blue professional bars taking profits. We fall into a downtrend. We haven't had blue professional bars buying it up at the lows. A little bit of activity, no blue boxes though. And we've come into Rambo patterns. Blue boxes come in, they sell it short. We get a signal. We're just squeezing there under the lip. Blue professional bars come in. So a look for a continuation of downtrend in Aussie dollar below 65 and a bit. And what have we got last? Japanese yen and bonds. So you'd have thought Japanese yen would strengthen with equities markets sell off. No, didn't really happen. So that's a little bit counterintuitive on Japanese yen. So let's see if we get a rally in Japanese yen, but it didn't happen Thursday. And 10 years, same thing. You'd expect a little bit of a rally. Yeah, we had a signal. We had some big pro bars down here, exhaustion sold, bullish divergence and so on. We tried to get going, but there was no conviction there and just rolled and went the other way. So for me, what I find fascinating is when the correlations, when the things that you expect to move together stop moving together and move the other way, that's when real problems happen. So normally with equities market sell-off, we'd get rally in Japanese yen, rally in 10 years, US bonds, rally in euro to some extent. And if we don't get that and the equities markets continue to sell off, then that's interesting because a whole bunch of global macro hedge funds and so on start to get into real problems when those expected correlations don't materialize. Anyway, I think it's going to be an interesting week, and let's just see how it plays out on that 13,500 tip bar chart. Hopefully you understand my point of view. For me, it's all about blue professional bars, big pro bars, the background's in blue. It's like reading where that comes in and just being smart about taking positions that line up with what the big professional money is doing. So good luck with your trading next week.